Do you want to know the 9 rules that smart investors follow to build real, lasting wealth? These aren't hacks, they're timeless principles. If you're serious about your financial future, you're going to want to stick around. Here's the hard truth. Over 90% of retail investors significantly underperform the market, not because they're lazy, but because they break basic rules. They chase hype, panic sell in downturns, or dump all their money into one hot stock. This video is your guide to doing the opposite. I'm Barry, a certified financial technical analyst, and today we're walking through the 9 rules that separate struggling investors from financially free ones. Don't forget, the links to the full research and free investing resources are in the description. Rule 1. Spend less than you earn. This is the foundation. If you earn $5,000 and spend $5,000, you're going nowhere. It doesn't matter how good the market does. If you're not saving, you can't invest. Use the 50-30-20 rule. 50% needs, 30% wants, 20% savings for investing. Don't overcomplicate it. Track your income, reduce lifestyle inflation, and automate a chunk into savings the day you get paid. Rule 2. Build an emergency fund. Before you invest $1, protect yourself, because if your car breaks down and you have no savings, you'll be pulling money from your investments at the worst possible time. Aim for 3 to 6 months of living expenses. Keep it liquid, in a high-yield savings account or money market fund. Your emergency fund isn't optional. It's a prerequisite to investing. Rule 3. Start early. Let time work for you. The earlier you start, the less you need to invest each month. That's the magic of compound interest. Your money earns money, and that money earns more money. Consider this. Investing $100 a month starting at age 25 could grow to $120,000 by the time you turn 55. Wait until age 35 to start. That same $100 a month will only reach $57,000. That's less than half. Same contribution in less time, it makes a huge difference. Rule 4. Diversify. Don't bet the farm. Putting all your money into one stock, even a big one like Apple, is gambling, not investing. Diversification means spreading your risk across industries, asset types, and geographies. Index funds and ETFs make this easy and affordable. As Nobel laureate Harry Markowitz once said, diversification is the only free lunch in investing. Rule 5. Invest consistently, even in bad times. Most people stop investing when markets crash. That's a huge mistake. The dips are where wealth is built. Use dollar-cost averaging. Invest a fixed amount monthly. When prices drop, you get more shares. When prices rise, your assets grow. Fun fact, missing just the 10 best days in the market over 20 years cuts your return by half. Rule 6. Know what you own and why. Don't invest in something you don't understand. That's how people lose big. Ask yourself, what does this company or fund do? Why do I believe in it? How does it fit in my portfolio? If you can't explain it to a 12-year-old, don't buy it. Rule 7. Minimize fees and taxes. A 1% fee might sound small, but over decades, it can cost you thousands. Choose low-cost index funds under 0.25% expense ratio. Use tax-advantaged accounts, Roth IRA, traditional IRA, or a 401k. Avoid excessive trading. Short-term gains are taxed more. Rule 8. Keep your emotions in check. Investing is emotional. When markets drop, fear kicks in. When stocks soar, greed takes over. Don't panic sell or FOMO buy. Create a written investment plan and stick to it. Rule 9. Only trade with extra money. Now, once you've nailed the first 8 rules, sure, you can trade. But here's the key. Only use money you can afford to lose. Keep your retirement money and core investments safe. Set up a separate trading account if you want to explore. Think of trading like dessert, not the main course. These rules may not be glamorous, but they are effective. They've helped investors like you and me achieve financial independence for decades. Start applying just 1 or 2 today, and you'll already be ahead of 90% of people. Enjoyed the video? Don't miss out. Hit that subscribe button. Plus, start your investing and trading journey today with our free training. Check out the links in the description.